let's completely shatter the illusion of safety that so many of us walk around with. Welcome to today's explainer. Picture this. You've got health insurance through your job, a free life insurance policy from your employer, standard car insurance. You feel pretty responsible, right? You're thinking, I've got my finances totally together. But what actually happens when something goes wrong and you realize the coverage you have isn't the coverage you actually need? Well, today, we are exposing 4 massive, critical insurance gaps hiding right there in your fine print. You know, the stuff you shoved in a drawer 3 years ago. But hey, before we dive in, just a really quick note. This explainer is strictly for educational purposes. I'm an enthusiastic explainer, not your licensed insurance agent or financial advisor. Your specific needs are going to vary wildly based on your state, your income, and your family situation, so please always consult a licensed professional before making any individual coverage decisions. Okay, let's get into it. 102 million. Right now, a staggering 102 million American adults are either completely uninsured or dangerously underinsured. And honestly, here's the scariest part. Most of these folks, they aren't careless. They actually believe their finances are fully protected. They think they're completely covered. These gaps are just hiding in policies they didn't read all the way through or in coverage types nobody ever even told them they needed.
So to fix this, we're going to systematically audit your financial blueprint. On our agenda today, the employer life insurance trap, the invisible disability gap, the health coverage mirage, and the overlooked umbrella shield, before finally giving you your own personal insurance audit.
First up, the employer life insurance trap, and why those free benefits are dangerously inadequate.
This trap catches even the most financially responsible people totally off guard. Look, a lot of employers offer a free life insurance policy as a perk. It sounds awesome on paper, right? But it comes with a massive misconception. Let's say you make $70,000 a year. Your employer might give you a policy worth maybe 1 or 2 times your salary, so $70,000 to $140,000. But if you've got a mortgage, kids, and 20 years of working life ahead of you, financial experts actually recommend coverage of 10 to 12 times your income. That means you really need closer to $700,000 to $840,000. Your free employer policy leaves a terrifying $600,000 shortfall. Plus, the second you leave or lose that job, that coverage, it just vanishes.
And why does that massive shortfall matter so much? Because 30% of families would face a severe financial crisis within just 1 single month of the primary earner's passing. Just 1 month. For millions of people, a financial crisis begins almost instantly, often way before an insurance payout even clears.
So how do we solve this? You've got to secure a 20 or 30-year level-term policy that is completely independent of your employer. You want a portable policy, one that stays with you no matter where your career takes you. And here is the absolute best part. Over half of Americans wildly overestimate what this costs. A healthy 30-year-old can lock in a $500,000 policy for literally $20 to $30 a month. That is less than your monthly streaming subscriptions. Honestly, if you have dependents, this is priority number 1.
Moving right along to gap number 2, the invisible disability gap, and the 1 in 4 risk to your paycheck.
There is just a massive disconnect in how we view risk. I call this gap invisible because, let's be real, almost nobody thinks about it until their income suddenly stops. Just under 1 in 4 of today's 20-year-olds can expect to be out of work for at least a year due to a disabling condition before they retire. And we aren't just talking about freak accidents here. We're talking back injuries, severe illnesses, pregnancy complications. But get this, while nearly half of adults, 46%, know they desperately need disability coverage because of this huge risk, a mere 19% actually have an individual policy.
Now, you might be thinking, well, my employer covers me or, the government will step in. Let's look at the actual data on those false safety nets. Employer plans typically only cover about half of your pre-tax income. Plus, if your employer paid the premium, those benefits are actually taxed. That leaves you with a massive monthly shortfall. And Social Security, they require total disability. They deny an unbelievable 68% of claims on average. And even if you do get approved, it pays out a painfully small average monthly benefit of just $1,582. In most cities, that barely covers rent, let alone your groceries or medical bills.
So the crucial point here is exactly what kind of policy you need. You absolutely must secure an individual policy with an own occupation definition. This is vital. It means your paycheck is protected if you cannot perform your specific specialized career. Without that exact wording, an insurance company could say, sure, you can't be a surgeon anymore because of your hand injury, but hey, you can technically work at a call center, so we're not paying. Always look for own occupation.
Okay, on to Section 3, the health coverage mirage, and why being insured isn't actually the same as being protected.
Did you know a staggering 41% of insured Americans were considered underinsured in 2025? Why is that? Because a single severe medical event like appendicitis or a broken bone that needs surgery can completely wipe out your savings before your insurance even fully kicks in. The out-of-pocket maximum for a 2026 individual marketplace plan can hit an agonizing $9,450. That is a massive financial hit that most of us just haven't budgeted for.
So how do we protect ourselves from that? Here is the exact blueprint you need to follow. Step 1. Really familiarize yourself with your plan's fine print. Know your deductible, your out-of-pocket max, and exactly who is in network. Step 2. Aggressively fund a health savings account, or HSA, to bridge that deductible gap. And Step 3. Explore inexpensive supplemental options, like hospital indemnity insurance, which basically pays a fixed daily benefit to help offset costs if you end up in the hospital.
Let's pause on Step 2 for just a second, because the HSA, it's an absolute financial superpower. Seriously, the health savings account is the only triple tax advantage vehicle in the entire U.S. tax code. Your contributions are tax-deductible, the money grows tax-free, and your withdrawals for medical expenses are totally tax-free. In 2026, individuals can stash away up to $4,300, making it the perfect tool to build up a dedicated medical emergency cushion.
All right, moving to number 4, the overlooked umbrella shield, and the absolute cheapest way to protect your life savings.
This might frankly be the highest value protection in all of personal finance. Imagine you're at fault in a really serious car crash. The damages are $800,000, but your auto policy only covers $300,000. Guess what? They can come after your personal savings and your house for that remaining $500,000. But for the incredibly low cost of about $15 to $25 a month, you can shield your entire life savings from catastrophic lawsuits with an extra $1 million in liability coverage. It just sits right there on top of your existing auto and home insurance.
So who actually needs this thing? Well, if you own a home, if you have a teenage driver who might, make a mistake on the road, if you own a pool or a trampoline, or if you've just built up any significant wealth over the years, making a quick call to your auto or home provider to add an umbrella policy is a total no-brainer. You've got to protect what you've built.
Finally, Section 5, your personal insurance audit, and closing those gaps in your financial foundation.
Let's pull all of this together. We've identified the gaps, now it's time to take action. I want you to ask yourself honestly, right now, do you have a portable term life insurance policy for 10 times your income, not just a freebie from work? Do you have an own occupation disability policy covering at least 60% of your pay? Have you fully funded an HSA to cover that high medical deductible? And finally, do you have an active umbrella policy protecting your hard-earned assets from lawsuits? If you answered no to any of these, pick your highest risk today and start right there.
Look, I know what you're probably thinking. Insurance isn't exactly exciting, and paying those premiums is never fun. But please keep this in mind. The staggering financial cost of being underinsured when a real emergency strikes is always exponentially higher than the cost of a premium. Good planning absorbs the shocks that would otherwise derail your entire financial life.
Your future self will definitely thank you for doing this audit. But before you go, think about this. If your paycheck stopped tomorrow, how many days would it take for your savings to hit absolute zero? If this explainer helped you spot a dangerous gap in your own coverage, please smash that like button and share this with a friend or family member who desperately needs to run their own audit. Make sure you're subscribed so you never miss one of our deep dives, and drop a comment down below right now letting me know what financial topic do you want us to cover next. Are there other hidden money traps keeping you up at night? Let me know, and we'll see you next time.